Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. And this is the monthly edition. Once a month, we review all the monthly charts, getting a big picture view, high level, sort of pulling back from the hand-to-hand combat of day-to-day trading and look at, what are the big trends and big pictures looking like in all these markets that we follow. My name is Ben Maldonado, and as always, I'm here with Barry Hederachi. How are you, Barry?
I'm good. Hi, Ben. Hi, everybody.
I know you look forward to this monthly review, as do I, because it really helps you focus on, what's the major trend, where are the trade winds behind you, and what's the direction that has the sort of the point of least resistance.
Absolutely. And,
Yeah,
even, we watch these monthlies, and even then, even while doing that, we get caught sometimes in day to day and either exit too early or, make tactical mistakes by not really sticking by the monthlies.
that's right. That's right.
So it's really important.
It's kind of our last check, when we're getting an idea and working an idea up and getting excited about something. What's the monthly look like?
Mm-hmm.
What's the monthly look like? Okay, maybe this is a counter trend. Maybe we better, adjust the size or keep it really tight in terms of the stops because you're going against the major trend.
And
Anyway,
especially, I was going to just say, watching the monthly support resistance area is super important because those are the bigger frames
mhm,
that work the bigger trends. So it's good to copy those down and keep them on a chart.
absolutely,
Mhm.
absolutely. So here we have our favorite risk proxy, which is Bitcoin. We've been watching this monthly. I mean, as volatile as Bitcoin has been, man, this monthly just does a terrific job of capturing the price action sort of at the extremes here. And if you look at it since 2021, we basically have been defined in this full square. The
Mhm.
price is just bouncing in the full square, deviates a little, comes back, deviates a little, comes back. Same thing on the bottom. And now it looks like we're getting stuck under this half square. And as long as we're under there, it's going to come down and test here again on the full square. And those levels on a monthly basis, we're talking about 44.5 is the half square, and the full square on the bottom is about 31.2. Like we talked about yesterday when we were reviewing the daily, you can see this sort of tightening formation, triangle forming here on this monthly, which given where we are being stuck under the half square, the odds favor it's going to break lower.
Yeah.
We'll see, but it's not looking super bullish right here in my stuff. What
Yeah.
about you?
Especially if we get an inside bar this month, that's really bearish.
Mm-hmm. So we'll see. But Bitcoin, we have the ranges on the daily. We know the daily's looking lower, and right now the monthly is not super bullish either. So to
Mhm.
get bullish, I think on the monthly you're going to need to take out this half square and sit on top of it, which is again around 44,400. So that's Bitcoin. Here's the NQs. Um, I love this square setting on this chart. I mean, it just really, really has done a great job of um, defining the price action and seeing sort of where we are. Um, Price and time here at the high, you can't get any better than that. That was a really nice hit there on the highs. Came down. The low so far in this pullback is right on the bottom square, and we've done an inside day so far, or an inside month so far in March, and we'll see which way we go. To me, again, it looks like you're over the top here. As long as we hold this, which is around 13,000, you could say, okay, we're not in trouble. But if we lose the 13,000, I mean, you're talking first stop is the half square, which is around 11.3. And then after that, it's the full square down at, 94, 9,500. I'm not super bullish. The dailies, as we reviewed, are clearly have clearly rolled over. Here, the bulls have this to hold on to, this full square. We lose that, then it's next leg down. What are your thoughts on the NQs?
Well, I was noticing we haven't had even a 1 bar counter trend yet. So I think
Nope.
we have to keep that in mind.
Yeah, it hasn't even been able to make a higher bar since that peak. It's been really weak. Let's check the next one. Here's ES. We have the super steep trend line, which we see there. But again, the action has been defined. The low caught by the full square. And remember, these things were set a year and a half ago, 2 years ago, maybe. And look at where that low came in. Again, as long as we're below the half square, we're weak. And that's, 45-25 area. We haven't even been able to sniff that. And that similar to the NQs, we haven't had an up bar. It's just been down, down, down. Here we tried to go have an up bar, did an outside bar, basically. But right now, below 45-25 on a monthly is weak. Major support, we're calling, say, 4,100. If we lose 4,100, it opens up the next square, taking us down to about 3,700. The steep trend line here has been broken of that, that parabolic move up off the COVID lows. It's a rollover to me. It's just a matter of how it's going to play out. Do we mess around here some more before going down? Do we get back up and test this half square before we give it up? Just the weight of the evidence, to me, again, is still down. What do you pick up from this chart, Barry?
Pretty much, well, it follows the NASDAQ. The low is really important at this point. And also we have to keep an eye on the next counter trend. Given the cycles that expired at the high, I really don't see this as, by the dip sort of a correction in a bull market. I think because of the type of cycles that expired at the high, it looks more like we're going to be in a bear market for a while. And because of that, we have to really watch the next counter trend. And if you look at the past, I was just noticing you had the year 2000 and 2007, 8. You can see it. You can see where the counter trends came and what was left afterwards. Mm-hmm. So just to say, we haven't even had 1 month, 1 bar counter trend yet. So that's just, you have to be aware of that. Other than that, well, the key level to watch would be that low.
On both.
And when that goes, there's nothing really till the next square. I mean, because we slice right up through there.
Yeah, I mean, your next high is down here.
Exactly.
So the full square comes into play for sure. Big decisions are going to be made here fairly soon. Here we're taking a look at the 30-year. We've been sort of negative on bonds since this high came in, and we've seen this structure coming down. The interesting thing with bonds, unlike the two equity markets we just looked at, the NQs and ESs, is that we have seen counter trends here, and we keep making lower highs and lower lows. And look where this latest counter trend has gone, right back into sort of the apex of that triangle that was formed there. And it's sort of back kissing this support line that had been running since 2018. Bonds, I think, are in a weak position. Yesterday on the show, when we were reviewing the dailies on the weekly show, I was saying I'm looking to see if we can get a decent setup, on the short side for bonds. And here you're sort of seeing on a bigger picture why. The pullback's coming right into this structure here. We're making lower lows and lower highs. I don't see a lot really bullish about this unless we can, break through this structure and take out this high and sort of get back up in here and get up on top of this full square up here. Otherwise, we're still in a weak position and heading down minimally to the half square, which is around 147.5. I know you've been bearish on bonds as well, Barry. Anything in the monthly here change your mind?
Not at all. It actually reinforces it.
All right.
Well, it's interesting because you have that monthly trend line, and I think the number we looked at yesterday from the weekly show was 160.20 being the key level to watch for like a flip point. So
Right
as long as
there.
we're below that, we're in a weak position. So
Yeah. So the ones we've all looked at now, three risk markets: Bitcoin, NQs, ES, and 30-year Treasury wouldn't be considered a risk market, but this is sort of related to what I'm going to discuss. Almost every other market we're looking at, and these are all the commodities, they're bullish on a longer term. So this is sort of the way you can develop a macro thesis and sort of see where the money's flowing, right? Money seems to be moving from risk markets like equities and Bitcoin into the commodities, out of this interest rate sensitive instrument, which is the 30-year Treasury, and towards commodities. And after we're done with this show, I think you'll see what we're kind of talking about. Here's wheat. Everybody's been talking about wheat because of what's going on in Ukraine and its effect on the wheat market. But the truth of the matter is we've been talking about wheat for a few years now. And the reason we've been talking about wheat and the reason we've been talking about these commodities is you can see on wheat, 6-7 year base was built here before we started breaking out in 2020 and 2021. And here's the move, right? There's the big move. When this happened, when we broke out here, we said ultimately the market's going to take us to new all-time highs. We're not quite there, but we'll get close. The other thing about this commodity market, that the other theme that came out when I was looking at all these monthlies for this show and reviewing this weekend, is it's sort of like a commodity relay race going on. One group of commodities takes the baton and they're running fast and going hard, while the others rest, correct, pull back, and sort of build up energy for the next move. Well, the grains have had the baton since last fall, late last fall, and they may be topping out here and handing the baton off to the metals, which we're going to see. So think of it that way. It's a bull market. There doesn't mean there aren't corrections and there aren't pullbacks. And when you're dealing with monthlies, they can be months long, these consolidations. But wheat, corn, and soybeans, which we'll review, last fall, they were all in the correction mode and pulling back right here. I mean, it doesn't look like much on a monthly chart, but when you look at this on a daily, that's 4 or 5 months worth of price action. And that's what it did. Someone else had the baton, the other commodities had the baton, then they passed it to these guys, and here we go. In the last 2 months, you can see what's been happening. So wheat is still bullish, still constructive. No signs of a long-term top in this sort of price action where we'd have to be concerned yet. It'll come at some point, but not yet. So what's your comments here on the wheat market, Barry?
Well, I think new highs are in order, and maybe even, the thing with commodities is they always go a little higher than we manage to target. So I think new highs for sure, but maybe even more after a couple of counter trends.
Mm-hmm.
So, well, it's bullish for now, and I think, like I told you earlier, I want to go back and do some extra analysis now that we broke out on the longer term trends and see where we are. But for now, I think new highs are in order. And again, I'm also looking for counter trends in this, and the counter trends now should be just, one bar.
That's right. Here's corn. Very similar pattern with wheat. Big base, breakout. See, here's that counter trend. This one looks like it was about 6-7 months long. And in bull markets, this is when we started getting on it again and bringing it to your attentions on the weekly videos. Hey, Looks like we've got a decent blow here. Looks like we got a shot, and there you go. Also, it stopped at an interesting spot, the full square, which you would expect, and damn near the all-time highs. So if we do get some sort of inside bar or pullback at all, you know, that sits on top of here or sits on top of the half square, it's bullish. You know, and as I said, these markets still have a couple years to run. But this square is really defining the price action very nicely. And corn is still a very bullish market. Anything to add on corn?
No, I think my take it's again similar to wheat and actually all the commodities. At this point, at least for me, it's hard to figure out where the highs are going to be. So the focus really has to shift to looking at the counter trends so we can trade them properly with the trend. You know, we waited all these years for trends, and we have a good one going now. So I'm really focused on sort of targeting the pullbacks for now. Yeah,
that's good advice, actually.
And I think we have more to run here. I mean, just an ABC gets you, you know, up in the next square almost.
Yep. Here's beans, very similar pattern. Here's the correction. We were all over it down in this area here, and there's your move. And in a bull market, that's what you want to do. You want to look for the pullbacks and you want to buy. You want to look for the pullbacks into support, see if you can triangulate the lows, and you want to get on it for the next leg up. And I think if you look at the grain charts as a whole, remember the patterns that you saw, because when we go to the other markets, you're going to see them in sort of an earlier stage of that same pattern where they're, you know, not near the all-time highs yet, but that's where they're heading. And again, beans looks good. This is the bull market activity you want to see. Pulls back, higher low, on top of previous highs, makes a new high. And this isn't a 5-minute chart, man. We're looking at the monthlies. That's key. This is big picture, big trend stuff. Here's a good example of something we were discussing. Where is it in the pattern? Grains were up and out, right? Here's gold. Nice base here, multi-year base, broke out, made an new all-time high there. And then for the last 18 months, it's been doing this garbage, frustrating everybody. Just last month and now this month, we're breaking out. So the next leg, this is telling me from a bigger picture standpoint, the next leg is started in gold. Just like we had those corrections in the grains, and we were identifying, hey, the next leg was starting in those. We're in the same spot here. So gold, I think, is extremely bullish on a monthly basis, as long as we're above this 1925, 1930 area, which just so happens to be the previous highs. As long as we sit there on top of that, the next move is to the half square, which is about 2200, and then the full square, which is over 2400. And those are realistic targets based on, you know, a monthly chart. I know you've gotten really bullish on gold with this move, Barry. Anything else you want to add about the monthly here?
Well, I think going back to market structure and patterns, you can see how, you know, one of the reasons we've been bullish is because look how shallow that correction was, you know, 21, 22. And we kept talking pretty much every month how bullish that is. And now we're moving out of that. So once we clear that, you know, the square, we just right about, you know, right there, right at the line, it opens up the entire next square. So I think the directionality is pretty clear.
And it's early in the breakout. I mean, this is just beginning for this next leg. That's the key. Whereas the grains are a little further along, these guys are just getting started. And silver we've talked about a lot on these monthlies because the structure was so good. The market structure, we had this long, big base, you know, multi-year base. We broke out, and then we've been just sort of chopping with a lower bias all on top of this structure. Well, this month we're breaking out. The lesson here is we corrected for 12, 18 months in silver, frustrating a lot of people. They were catching a lot of crap in silver and gold. Oh, look at Bitcoin. It's going up so much, and gold and silver aren't doing anything. Bitcoin's the new gold. Silver's terrible. Well, they may change the tune 6, 7 months from now. If this breakout holds, this is very bullish for silver. The targets on a monthly, first it's the half square around 29, and then the full square about 37.5. I really like the way the silver chart set up technically and structurally, and the monthlies are telling us that the next leg up is started. What else do you have to add on silver here?
Nothing much to add other than, we had the same pattern, very bullish consolidation. If that's a complex two, then we have 3 to look forward to, and so let's trade it.
Absolutely. The last metal we're going to look at is copper. Here's another one that, we've been harping on. The pattern was really bullish because we were doing this very frustrating up and down triangle, but we were doing it right near the all-time highs in 2010, 2011. And then this past week, copper powered up, broke out of the triangle, and looks ready to go. Again, early in the move for the next leg. I don't see a lot of problems with this chart. This triangle was well defined and was really, if you drop down to the daily or the lower time frames, you can see how long this thing consolidated and chopped around before it made this power move this last month. Copper looks good. The full square is going to be your short-term target, which is around 563. The half square, which we're interested in to see how it acts up there, is at a little over 5. As long as we're above these prices from the previous all-time high, there's absolutely nothing bearish with this. And, just for further protection, as long as you hold this 440, 430 area, sort of the lower bounds of this triangle right now, you're in good shape as far as higher prices. So gold, silver, and copper really look to have grabbed the baton this month, and I believe they're set to move, sharply higher and be one of the groups of commodities that performs very, very well. I know you've been studying copper too, Barry. What do you see on the copper chart here?
Well, all the metals, in general, they all fall into the same category. I think we were waiting for trending conditions. We have them, and now it's just a matter of trading them.
That's right.
The thing is, when markets are moving, there's very little to say because all you have to do is trade it, and it gets complicated when we're consolidating or counter trend moves. And now I think we're just coming out of it. For a lot of markets, we're coming out of these consolidations and counter trends. So it's time to get to work.
That's right. Find a way to get in and trade it.
Yeah. So you have to have your, systems in place to trade that, the trend.
Crude oil is an interesting one. I was thinking, when I went into this review that, crude's going to be one of those ones where we're going to say, the baton's going to be handed off and someone else is going to be doing the running. I'm not so sure crude's ready to give up the baton. What we keep seeing is it moves up, it sits on top of the square. It moves up, it sits on top of a square. Here, it's just moved up and powered right through the square, and now we're up on another square here. If we can stay above this 114 area, and maybe give it a little bit of a leeway, say like 110, 111, if we can stay on top of that area, man, it's set to go for another square, 140. I keep thinking, okay, crude's done. And then the monthly chart keeps telling me a different story. The angle of ascent is not sustainable. That's for sure. But maybe it does a little sideways correction and then starts another leg. I just don't see a lot that's weak looking at this monthly and, other sort of indicators and things we look at with crude are not screaming any sort of top here. So I know you study crude a lot, Barry. Is there any different view you have on the crude here?
I don't think it's different. Well, we talked about it yesterday on the weekly show, and I think the next major resistance was around 135.
Mm-hmm.
And I keep repeating this because I want to remember it also, and that's just that when commodity markets run, it's very difficult to nail the high. So the best we can do is just trade the trend till it's not. Sooner everybody gets onto that mode, we can do really well with this. So yeah, it's good to look for targets, but who knows? We could who knows where it could go.
So in other words, your focus is less upon how high it can go and where you might want to get out. It's more of where do I get in?
Exactly. Well, for all the commodities, after we had these breakouts, my sort of approach changed. And I think for commodities, from what I remember in the old days, once they get rolling, it's really difficult to nail it. Plus, we don't really have to. I mean, it's good to have reasonable targets, but I think it's really good more important to focus on safe or low risk entry points, which we, that's the stuff we cover on the weekly basis. So.
Absolutely. And, given that, looking at on a monthly basis, this 114 to 110 area, as long as it can stay in that area, that's a strong signal that higher prices will be coming.
And where's your half square up there? The next one?
The next one up here is 127.
And the next one up, full square?
140.
Okay.
Mm-hmm.
So 135 is around that 3/4 level?
Yeah, probably in here, right in here.
Okay. All right.
So crude, again, it's bullish, bigger picture's bullish. Watch support levels. If they hold, it gives you your green light to use your methods to get in and trade it. This one's intriguing to me. I brought it up on the weekly show. You can see just for where we are in the move so far, it's less like the grains and more like the metals or things that haven't had the huge move yet. Gas broke out early to middle of last year, spiked up to make a high. It's pulled back, perfectly held the half square, and now we're marching upward again. I think natural gas is going to be one of the ones that's grabbing the baton. Maybe it's got something to do with it's got to catch up with crude, but there's a big move coming here, I think, as well, and the signpost to look for on a longer term basis that it's starting, or as if we can sort of call it 570, if we can sit on top of 570 or maintain this 570 area on a price move, it opens up the full square, and then you're talking about $9-10 gas, nat gas. But I love the structure here. We spiked into this high, pulled back, held exactly where it needed to, and to me, it looks like the next leg up is getting ready to start on natural gas. Where are you on the Widowmaker, Barry?
Well, what I think is there is another leg. Again, it comes back to now that we're all, everything's moving. It's just a matter of getting positioned at a good spot. But I think at least we should go up and test that next half square. Mm-hmm. And the count looks pretty good. That looks like a complex 2. We had a clean 4. So this has to, unless the 5th fails, it looks like we should just go up to that 7.5 and tap that.
Agreed. Natural gas
at a minimum, good. Right? At a minimum. So
right. Now we're moving into the softs. Looks kind of like the natural gas chart, doesn't it?
Mm-hmm.
Same feeling about sugar. Brought it up on our weekly show, off the daily moves. It looks like the next leg is ready to get started in sugar. And again, remember the overall pattern we talked about: the big base, the breakout, then some sort of consolidation or pullback. There's 3, 4, 5 month pullback right there. Frustrated people chopped around between 18.5 and 17.5 for months. And here on the last 3 days of this past week, boom, 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 we get a strong push up. To me, it looks like we're ready to start the next leg up in sugar. First target is the full square, which is around 23.40. And that's back to the 2016, 2017 highs. So you can see that how different commodities are in different phases of their bull markets. Sugar looks like it's more like natural gas, broke out, made an initial high, pulled back. So if we catch the next leg here, it's possible it could be, the big third leg, the big leg we saw in the grains, the big leg we saw in crude. We don't know, but we do know that it's bullish and you got to be in it to catch that kind of move. So sugar is one that I am short term, and of course we're doing the monthlies here, longer term bullish on. Any other comments on sugar, Barry, that I didn't sort of hit on?
No, we're good.
Let's go to the next soft. Here's cotton. Cotton's a little further along than sugar, but again, it's the same type of pattern. See, here's the consolidation and the correction that we saw sort of mid move, sort of like sugar's like would be right here, basically coming out of this. Cotton's had its move up, and now here it looks like we're heading into some sort of consolidation or correction phase in cotton. How will we know when that's over? How will we know when sort of the tide is turned there? Right now, it looks like this half square is a good marker to tell us, when we can get and, sort of sit on top of that, it looks like cotton will be ready for the next move. For now, I think we got to watch cotton, see if the pullback starts going, not sideways like it started here, but starts coming back. Do we come back and sit on support somewhere? Ideally here, if we can do it higher would be better, but right here is where there's major structural support. And we would be sitting on top of the highs, the multiple highs we've seen, in the last 6, 7, 8 years. Bigger picture, cotton's still very bullish, looks good. What do you have to add on cotton?
Looks good. We have a counter trend. So this is one of those ones to watch. And so we'll be covering those on the weekly. For now, I think there's probably more upside, just like the rest of them. So let's just watch these pullbacks.
Yeah, the idea is to isolate the pullback and figure out a spot to get in when it gives us the proper signals. Here's cocoa. This one's really interesting to me because it is the one commodity that is continuing to sort of consolidate in a multi-year base pattern. A very frustrating triangle for bulls and bears, but it has those characteristics we like to see right near the end when it's about to break out. And that's this series of higher lows that keep coming in. If this monthly bar, ends up taking out this high here, we'll have an even higher low. And that may be the one that launches it. I'm watching cocoa. I know Barry's watching cocoa as well, and we're waiting to see this big base finally make its breakout because the amount of time it's spent chopping around in here is building up a ton of energy that's going to get released. So if it does break higher, as the chart is suggesting, the move out of here should be a really, really big one. Anything else you have to say about these kind of triangles? Any wisdom to share about?
We witnessed a few of them, how they pan out, and they can be really profitable. So it's just a matter of, patiently waiting. Now this is starting to act up again. So let's see how we go.
Yeah.
Fully worth, the patience is fully rewarded at some point.
In spades, right? If you're in when you get the breakout, the moves are nothing short of stunning. Here's our last one on the soft side and the commodities, and it's coffee. Coffee's in the midst of a pullback, and here you see, we were making these series. Once we broke out, we were big move inside, big move. Now we're doing this up down sort of stuff, and this is in the middle of a consolidation. We're watching this to see if we can isolate the pullback and again identify a good spot. The ideal spot would be here around 213, 212. if we could pull back and we get good signs, both technical and fundamental and indicators telling us, hey, this thing looks like it's ready to make a turn, like we did on the grains, that'll be the time to get involved again. For now, the half square is sort of capping it in the about 255 area, where the highs came in, and it may chop around here in this half square for a while. We don't know, but we're going to watch it and see if we can get the signs when it's ready to go. But as long as we're sitting on top of, this 212, 213 area, it's very bullish in the longer term. So fully expecting, as long as we do that we're going to go up and we're going to make new all-time highs, higher than the 2010, 2011 highs. I know you love your coffee, Barry. What do you think about coffee here?
Well, I think long as it's above that full square, it's fair game.
Mm-hmm.
And I think there's probably more upside to go.
I mean, again, the bigger picture story in all these charts is telling us that risk in equities, risk in Bitcoin is being liquidated, right? That those things have turned the corner and they're in a position now where the probabilities favor that there's going to be lower prices on them. That could change, this week, next month. And if it does, we'll pick it up in the charts. It's also telling us that from the commodity standpoint, the bullish longer term tailwinds remain and are still pushing and driving these things higher. So the idea, as Barry has mentioned multiple times, is to focus on, look for the pullbacks, see if they come in on support, see if things line up, and get involved in the market in a bullish way. Until that changes, we think these markets still have higher prices in them and more to run. As I said, the summary is the commodity markets remain bullish. The risk markets like NQs and ES and Bitcoin look to be better sells. And from the message from the bond market on a bigger picture as well is higher interest rates are coming and lower bond prices. So keep that in mind as you do your hand-to-hand combat every day. Whatever market you're in, what's the big picture saying? What's the main trend on a big picture viewpoint? And as long as you're aligned with that, at least you have the wind at your back. So until next month, I hope you enjoyed the monthly chart review, and we'll be back at it again when we get another monthly bar. Take care, Barry.
Thanks, Ben. Good coverage. We'll see you later.
Talk soon.